You know, Warren Buffett complains all the time that he doesn't pay enough taxes, right? Well, yeah, although first of all, I'll tell you, I'll let you in on a little secret. He's lying. Warren Buffett, when he talks about the fact that he doesn't pay taxes, less than 1% of his income is earned as an individual. Just less than 1%. 99+% of his money is earned through his corporation, Berkshire Hathaway. Warren Buffett owns a third of the stock. They pay 35% tax. They pay billions of dollars a year in taxes. That's Warren's money. A third of it is his. So he chooses to pay it through his corporation. And of course, if the corporation does pay a dividend to Warren Buffett, he pays another 15% tax on that. So his real tax rate is 50%. So when he says he's only paying 15%, he's paying less than his secretary, he's lying. And in fact, when he says he wants to pay more taxes, he's lying about that too. Warren Buffett pays himself a salary of $500,000 a year. That's less than the salary I pay myself. He's a billionaire. I'm not. Why does Warren Buffett work so cheap? Because he doesn't want to pay the taxes. You see, if Warren Buffett paid himself a big salary, he would have to pay a lot of money in taxes on it, like I do. He would have to pay 35% federal, and he'd have to pay I'm not sure what the taxes are in Omaha, but he'd have to pay those. He'd have to pay the Medicare tax, right? All those taxes. So he doesn't do that. He leaves it in the company where he owns a third of it. And get this, he's actually a lot smarter. Berkshire Hathaway trades at 20 times earnings. That's the PE. So every dollar that Warren Buffett doesn't pay himself in salary adds $20 to the value of Berkshire Hathaway stock. Now, if he owns a third of it, that's $7 for Warren. So if he doesn't pay himself a dollar, he's $7 richer. And now when he sells that stock, guess what his tax rate is? 15%. Right? So Warren Buffett is going out of his way to arrange his income to minimize his taxes. Then he goes and cries that he's not paying enough taxes, and he wants the government to raise them. He can raise his taxes anytime he wants. Just pay himself a salary, or just write a check to the government. But back to what I really wanted to talk about. Look, Warren might not be the best economist, and he might not be that savvy in politics, but he's obviously a good businessman. He's made a lot of money. He's run a lot of companies successfully. Who do you want to have Warren's money? Warren or Barack Obama? Warren. I mean, what is he going to do with it? Put more money into another Solyndra? You think Warren Buffett would have bought Solyndra stock? And Warren Buffett has all this money. The guy drives a pickup truck. He lives in a little house. I mean, he's not an extravagant guy. Now, when these people say we need to raise tax, you know, we can't let the rich have a consumption tax, right? Because then they're not going to pay taxes because they're only going to pay taxes on the money they spend. Well, yeah, because that's the only money that benefits them. See, if Warren Buffett is earning hundreds of millions of dollars a year, and he's earning hundreds of millions of dollars a year, if he spent it all, well, then he would pay a big consumption tax. But if he only spends a little bit of it, then what is he doing with the money that he's not enjoying? Well, he's using it to grow his business. He's growing the economy. Why should the government tax that money? See, they always say we need to tax, when we want to have a tax cut, right, to stimulate the economy, they say, well, we need to cut taxes on the middle class because they'll spend all that money. See, if we cut taxes on the rich, well, they won't spend it. Yeah, they'll invest it. They'll grow the economy. They'll create jobs. They'll create products. That's what we want. We don't want to tax savings. We want to tax spending because spending doesn't grow the economy. Spending is the consequence of a growing economy. You have to grow it. You have to produce it before you consume it.